Learning to live with inflation. I'm starting to think this might be a real thing. We'll see. Let's move to the next slide. It kind of interesting and yet boring week in a way. I mean, we were kind of running in place a little bit. The rally stalled out. Of course, we had two inflation reports this week. CPI was in line, while the PPI was fairly, I guess, elevated compared to expectations throughout the week. But you can look for as far as inflation goes, you can look all over the place. Bitcoin, you could always say it has something to do with what's going on in inflation. I mean, they traded as high as 94 this week, and all these other coins are going up with it. uh, similar deal here with the dollar. I mean, dollar is just nonstop. Dollar's up again today. It's approaching 2-year highs. More to the upside when we talk about 10-year yield, 4-month high. So again, you're looking back to sort of July with a couple of different things, with especially with bonds. 4-month high on those, 4.47% now. And Powell said yesterday there's no need to hurry to cut rates, which is kind of interesting. We haven't heard him say that too often. And then, but at the same time, volatility is low, right? Especially after this election. VIX and VVIX both at 4-month lows. Realized volatility is sitting in the single, I'm sorry, mid to low teens here. So, what do you think about this landscape right now?
You know what? I think the rate cut got. Listen, bonds. If you've been looking to trade bonds since the beginning of the year, the high end was around 130 and the low end was around 120 and change. Come September, we had, when they were all talking about how many rate cuts they were going to have, we had that big spike up to 135-ish or whatever it was. We're sitting here at the low end at 126 on the bond, probably the mean from August to the beginning of the year. I think what Powell is saying is we're okay. It's not too hot. It's not too cold. But I think
data dependent.
Yeah.
Phrase.
Yeah. I mean, that's the way I look at it. I'm the world's worst bond trader. So there.
Yeah.
Put that with it.
Yeah, I'm right with you there. Let's move to the next slide. Just since the election, these are some select things as far as returns go. Dogecoin, 120%. Coinbase, 65%. Tesla, 31%. These are approximate. They did them a day ago. Bitcoin, 28%. Banks, of course, in the form of regional banks, up 11%. IWM, which also obviously has a lot of banks in it. Small caps been up 6%. SPY, 4%. Dollar, 3%. Then you got the downside, of course, bonds down 2%. You got gold down 5%. Who had that one on their bingo card? Oil down 5%. Oil's been fairly weak. Of course, Chinese names have been getting smacked. What's Baba? Baba had earnings today. I didn't even look and see what that's doing. Not sure what's going on with that.
Baba's $90 and change. It looks unchanged this morning.
Okay, I know it was down yesterday.
I don't know if it came out yet. I would assume that it has by 8:20. But these Chinese stocks sometimes could be a little bit late.
Yeah. Chinese names overall down 7%. You look at FXI, DJT down 10%, and then you got VIX, the leader, kind of in the clubhouse. People down 28%. So, yeah, I mean, these are the things that have moved kind of the most, right, since the election. Obviously, Tesla's made a move. You've seen what's happened with banks and small caps and obviously bonds. Gold,
that and airlines. You got to throw airlines in there too, though. They're parabolic too to the upside.
Oh, they have? I really hadn't.
Oh man, I didn't notice them either until I traded UAL yesterday. Yeah, they are parabolic.
Yeah.
Is that just because oil dropped? Must be.
I have no idea.
Huh.
Yeah.
Let's move to the next slide.
There, though. Yep, volatility's good.
This one is just the kind of looking at bonds. This is the largest bond drawdown we've seen. And now this is not in consecutive months. This is just since they started. 51 months drawdown in bonds since August 2020. The next time was in the early 80s, July 1980 to October 1981. That was 16 months. But you can see some of these other times here. I mean, this is a really long drawdown in bonds. And we haven't seen, obviously, again, we've seen upticks at times. I'm not saying consecutive months. I'm just saying since they've reached a new high, this is how bad it's been in bonds more recently. Mm-hmm. Historic so far.
Yeah. Historic.
That's why everybody keeps trying to get long, including myself at times.
Yep.
Let's move to the next slide. So everybody's been talking about what's going to happen fiscally, right? With government spending, et cetera, and with tariffs. This is a chart looking at the top 10 imported U.S. goods last year, so last calendar year in 2023. But I'm sure it'll be similar this year. I mean, we're generally the same people. Passenger cars is number one. Pharmaceuticals is number two. Crude oil is number three. Auto parts is number four. Obviously, we do a lot with autos when you look at this as far as importing. After that, down the list is cell phones and electric machinery and computers, telecom equipment, industrial machinery, semiconductors. So if people are wondering like where's tariffs going to get hit, what's going to be more expensive, this is a list right here of potential things, and maybe you could look at potential names, et cetera, stocks, et cetera. So,
yep, good to know.
Let's move to the next slide. We talked a little bit about this, kind of looking at the chart a couple of two charts ago, but financials have really outpaced real estate in this rally. Financials have really moved to the upside, and real estate's probably been held back a little bit as bonds have started to, or I should say yields have started to go back up. But you wonder if this is going to continue with these financials. And everybody's like, talking about, financial deregulations, et cetera, is probably going to push them higher. Who knows? But they definitely were fairly strong over the past week. Again, the rally stalled out this week, kind of hard to tell, but financials have been strong. Real strong.
Yeah, Goldman Sachs, JP Morgan, these are the bigger boys certainly have been very strong. I agree with you there. Whether they continue, I don't know. But JP Morgan, has an Ivy rank of 29. Goldman Sachs has an Ivy rank of just about 29. So there's things to do in there with decent implied volatility for some of these bank stocks too, other than Goldman Sachs and JP Morgan. So I think they put them on your radar. Yeah, for sure. Yeah. Mm-hmm. Good job, Jamal. I like
one more.
Last one.
More.
I'm sorry. I apologize.
Don't you cut my man off? Come on.
You know what? This is interesting. General Mills, which obviously makes food and cereals for a lot of people, they're heading to the pet food sector. This is the fifth acquisition they've had in the last 6 years or so. Mars too has done the same thing. So people are going. These companies are going that route. Amazon goes after HIMSS. They had a new telehealth offering for Prime members. So there's a lot going on in that space right now. And then I didn't even realize this until literally yesterday. NVIDIA was added to Dow Jones this past week. Intel got moved out. Their earnings are coming up this week. It's one of the few things we got going on. I thought it was funny. AAP, Advanced Auto Parts, got whacked on earnings. They cut their outlook, and they're expected to close 700 stores. I don't know if that has to do with EVs. I don't know if people are not repairing their cars as much. Who knows? But kind of interesting there. No VIX futures expire this coming Wednesday. And, that's an old research. Don't worry about that. But I really liked it so much, I had it in there twice. That's all.